Hello. Have you ever wondered how lots of traders are making money off the Forex market despite the instability of the market? Have you ever wondered if you too could be among those Forex moneymakers? Well, today I'm going to share with you a few tips that will help increase your profitability in Forex trading.
Let's begin.
Understanding the indices you trade. Understanding the instrument in derived trading is key to your success in trading. Whether it currency pair, volatility, boom, and crash.
Don't crash! Don't crash!
It's very important because you cannot succeed without first understanding the interactions of both buyers and sellers in respect to demand and supply zones in each trading instrument. Also, understanding the behavioral characteristics of each candlestick in their respective indices or instruments is key to planning and executing a good trading strategy. Without understanding the way your instrument of trade behaves, your strategy or trade is doomed to fail.
Darlings, I'm absolutely doomed!
If I'm trading boom and crash, the morphology, the nature, mobility, and behavior of the candles in boom and crash is different from the other instruments in derived indices. Instruments such as step index, volatilities, currency pairs, cryptocurrencies, or range break possess their distinct characteristics in behavior. So I cannot begin to trade step index like the way I used to trade volatility 75. Step index and volatility 75 behaves differently. Even though I have a lot of experience with volatility 75, I will still be a loser trading step index because of their differences. I may have an edge trading step index due to experience, but on the long run I will definitely lose a lot of money.
Rule number 1.
So rule 1, don't trade an instrument you don't fully understand. In each instrument, candles behave differently around demand and supply zones. Understanding these differences will help you effectively apply your strategy.
I'd welcome your strategy.
Like Elliot said, understanding the markets is very, very vital and important, because you cannot fully be consistent in making money if you don't understand the market you're trading. You need to understand it. You need to know what controls it. You need to know how the market plays out. Many of you have been trading derivative and Forex for a very long time and you have not been profitable. The reason that you have not been profitable is because you have not approached trading the right way.
Are you serious? Are you serious, Brian?
You have not approached Forex the right way. You have not understood the forces at play in these markets. Remember, for a candle to be formed, two factors are involved. Either it's the buyer or the sellers. These two factors, the bears and the bull, they have power, and the power they possess that form the structure you and I see in the chart. So it is that your understanding of the bear and the bull, it's what will help you to know when and how to enter the market and trade profitably. For instance, the market will either form an uptrend, a downtrend, or a range. But each of these structures that the market will form are dependent on key factors. Remember, the bear and the bulls are in a relationship, a tug-like relationship, where they are in constant tussle or drag in between who will have control of the market at a particular time. Okay? So then they are in this constant fighting control of the market at that exact time. And this control can last for a period of time, even for days, months, or even a year. And even in that space of range of time, both will still be having their differences and short-lived control. Sometimes you see that even in a broad range of buyers, sellers still comes in to take control for a short while. Okay? So the thing to note is that before you enter a market, understand what between these two, buyers and sellers, who has the exact control, who is really controlling the market. For the market to go up, whether short or long, it means that at that exact time, buyers are in control. For the market to be going a downtrend, it means at that exact time, the sellers are in control. Once you understand these two factors, these two key components, you have solved 85% of your problem. Because now you now know who has the power, and you now know who to side. It's one common rule that every trader come to realize or come to know. They will tell you don't trade against the trend. And it's very important. The trend will only happen when certain conditions are met. And one of those conditions is that either bear or bull are in control. So the market is making higher highs, higher lows. It definitely means that at a certain time, buyers are in control, and at a certain time, sellers are in control. It is when you understand this concept, you'll be able to now pick a particular position and then flow with the market. For instance, let's say you are trying to swim.
Swimming in the swimming pool.
In a river. It's easy to swim following the current when you flow against it. When you flow against it, you lose energy. You get easily higher. The market will weaken, the river weakens you, and you are easily tossed around. But if you flow with the current, either with your skill or strategy, you flow very well till when you're okay to leave the water. So swimming with the current gives you more control. It gives you more control over your money. It gives you more control over what you lose. It gives you more control over the trade, because you're flowing with the current, you're flowing with the trend, you're flowing with the factors that are controlling the market at that exact